Hello, Mr. Hussein. Welcome to our group video presentation. I am Koi Shi Song from 21B. My other group members are Mohana Santia, Bok Wei Hong, Jayanti, Imano Hakim, Ziaudin, and Tuwania. In this video, we are going to present our findings on the financial analysis of two food and beverage companies from the main market of Bursa Malaysia, FNN and Nestle. In the beginning, I'm going to share about the institutional framework of Malaysian financial system. Malaysia has now formed a financial system with commercial banks as the main body, which coexists with investment bank, security company, insurance company, investment trust company, policy financial institution, and various financial intermediary institution. According to the classification of the Central Bank of Malaysia, Malaysian financial institutions are divided into four categories: licensed financial institution, development financial institution, approved and registered intermediary, industry association, and training institution. In its financial institution also include the Islamic financial system, forming a unique dual banking structure, where traditional finance coexists with Islamic finance. The Kuala Lumpur Stock Exchange, or Bursa Malaysia, has now become one of the largest stock exchanges in Asia, offering numerous investment options of more than 800 listed companies. Meanwhile, a relatively complete multi-level capital market has been established, but the scale of the ACE market is still small, and there's still much room for development. In the capital structure, the corporate external financing of Malaysia has gradually shifted from indirect financing to a structure where both indirect financing and direct financing are equally important, in which the latter has fulfilled the large financing needs of corporates and companies, enabling commercial banks to fulfill the financing needs of people. The establishment of development financial institutions serves specific targets, which mainly include service and agriculture sector, small and medium-sized enterprises (SME), infrastructure, import and export trade, and high-tech industries. In short, Malaysia's financial structure is relatively complete, and financial development is relatively high. That's all from me. Thank you.
As an introduction to our group assignment, we have chosen Nestle and FNN Company for our research purposes. Nestle, it was founded in 1867 by Henry Nestle. Little Nestle is meaning of Nestle, a German word which has been company trademark since the company was founded. Nestle is much engaged company with in excess of 94% of business originating the food and refreshment part. Yang amat menghormati Tan Sri Dato Sri Sheikh Anwar Jamaluddin is the chairman of year 2018 and also 2019, while FNN is established by John Ferris and David Chalmers Navy in 1883. FNN is among the locals and Malaysians most prepared associate, and its features acknowledge the expectational capability of being a market pioneer and regularly named in various groupings. While the chairman for FNN in year 2018 and 2019 is Tengku Syed Bendahari Police, who is Syed Badaruddin Jamil Ibni Almarhum Tengku Syed Putra Jamaluddin.
Good afternoon, sir. So today I'm going to talk about financial instrument. So financial instrument is meant by the assets that can be traded or also be seen by the capital that can be traded. Most of the financial instruments provide efficient flow and transfer of capital throughout the world's investor. These assets can be in the form of cash, a contractual right to deliver or receive cash, or an evidence of one's ownership of an entity. So there are actually two types of financial instrument, which is cash instrument and also derivative instruments. Firstly, the financial instruments that used by FNN, the company, is receivables, which is considered as cash instrument, where receivables are stated at anticipated realizable value. Next, FNN also use interest-bearing borrowing as their financial instruments. The interest-bearing bank loans of the company are recorded at the amount of proceeds they receive. The company also uses equity instrument in their operation. The stocks or the share of FNN are considered as equity-based financial instrument. Next, FNN hedge against the risk associated with foreign currency or interest rate fluctuations by using derivative financial instruments, which is foreign exchange forward contracts and also the interest rate swap contracts. In a short summary, financial instruments play an important role in the operation of the company. Thank you. That's all.
So today we are going to see about the financial instruments of Nestle. First of all, what is financial instruments? Financial instruments are resources that can be exchanged, or they can likewise be viewed as bundles of capital that might be exchanged. Most sorts of money-related instruments give effective stream and move of capital all through the world's financial specialists. Based on the financial report of Nestle, we found the financial instruments. There are some of the financial instruments, and we are going to see the foreign currency, reasonable incentive, and liabilities. Okay. First of all, the exchange of foreign currency. Exchange of foreign currency forms are meant to separate practical monetary forms of goods, elements at trade rates at the dates of the exchanges. Financial resources and liabilities designed in remote monetary forms toward the finish of the detailing time frame and retranslated to the practical cash at the conversion standard at that date. So non-money related resources designed in outside monetary standards are not retranslated towards the finish of the revealing date. Okay, next we are going to see reasonable incentive. Reasonable incentive through benefit or misfortune class contain money related resources that were held for exchanging, including subordinates, unexpected thought in a business plan, or monetary resources that were explicitly assigned into this classification upon beginning acknowledgement. Then monetary liabilities are at first perceived as reasonable qualities, net of exchange costs incurred subsequent to introductory measurement. Financial liabilities are perceived as amortized costs. So, as a summary, financial instruments give three significant monetary capacities, which is price, disclosure, liquidity, and reduction of exchange costs. So, that's all from me. Thank you.
Assalamualaikum and hi everyone, my name is Muhammad Adizuddin and my entry number card is 191222448. Today I'm going to present about the financial calculation and analysis. According to Investopedia by Alicia Tuvilla, financial analysis is the process of evaluating businesses, project budgets, and other finance related to transactions to determine their performance and suitability. This analysis helps the top management to overlook their financial strength for future planning. For example, investing on new product or decreasing and increasing the number of employees. It consists of 5 financial ratios, that is liquidity ratio, asset management ratio, debt management ratio, profitability ratio, and market value ratio. The ratio is used for analyzing the ability of a company to pay off both its current liability, which show the cash level of a company, and the ability to turn other asset into cash to pay off liability, and other current duration. In this part, we take two types of liquidity ratio, that is current ratio and quick ratio. All of the value that are in this calculation are from both of the company financial statement in the annual report. The difference between the current ratio and the quick ratio is the time of duration for the company to turn their asset into cash to pay off its liability. For current asset, it takes 1 year, while the quick ratio, it takes almost 3 months. Okay. For the formula of the current ratio is current asset divided by the current liability. Okay. As a result, for Nestle company in 2019, that is 0.648, and 2018 the current ratio is 0.682, while F&N company in 2018 the current ratio is 2.208, and in 2018 the current ratio is 1.928. Okay, for the quick ratio, the formula is current asset minus by inventory and then divide by their current liability. Okay, so the result in 2019 for the Nestle company, that is 0.315, and then in 2018 that is 0.401. Okay, for the F&N company, the quick ratio in 2019 is 1.481, and 2018 that is 1.347. Okay, for as a result, the company F&N is the high value for the quick ratio and the current ratio. So the F&N company is more perform than the Nestle company. Asset management ratio, efficiency and effectiveness. A company is using its asset and in the generation of revenues. They indicate the ability of a company to translate its asset into the sales, the ratio of inventory turnover and the total asset turnover. Okay, for the formula of the inventory turnover is by the sales of the company divided by their inventory, and while the total asset turnover is sales divided by their total asset. For the result for the Nestle company in 2019, for inventory turnover, that is 9.999, while 2018 there is 10.406, and the F&N company, the inventory turnover is 7.4049, and in 2018 the ratio is 7.786. Okay, while the total asset turnover in Nestle company, the result is 2.024 in 2019, and in 2018 there is 1.938. But in F&N company, the total asset turnover is 1.164, and in 2018 there is 1.157. Okay, so the conclusion, the Nestle and F&N are able to utilize the asset and inventory to generate its revenue. Nestle is more efficiency to use their asset management compared to F&N. Debt management ratio is using for measures how much of a company operations come from debt instead of other form of financing, such as stock or personal saving. The debt management ratio is one measure among many of a company risk and likelihood of default. Okay, for the formula of the debt to capital ratio is total debt divided by the total invested capital, and as the result for the Nestle company in 2019, that is 61.2%, while in 2018 that is 62.8% for the debt to capital ratio, and for the F&N company 4.9%. There is from a debt to capital ratio, and in 2018 there is 14.6%. Okay, so the Nestle is more risky than F&N because it have high percentage for the debt to capital ratio, more than F&N company. Profitability ratio are a class of financial metrics that are used to assess a business ability to generate earnings relative to its revenue, operating costs, balance sheet, assets, and shareholders equity over time, using data from a specific point in time. Okay, for this profitability ratio, we have determined that we have around 7 ratio, that is EBIT, sales minus by cost of goods sold, and then minus by operating expenses. Okay, for operating margin, the formula is EBIT divided by sales, and then the basic earning power, the EBIT divided by their total asset, and then the return on asset, that is formula is net income divided by total asset, and then the return on invested capital, the formula is EBIT multiplied by 1 minus the tax, and then divide the total invested capital. Okay, for the next formula and the last formula is ROE, that is return on equity. So the formula is profit margin multiplied by total asset turnover multiplied by equity multiplier. Okay, so we simplify the formula, that then the formula become net income multiplied by 1 divided by equity. Okay, so this is the result for the Boost company. Okay, for the earning before interest and tax. Oh no. Okay, so for the basic earning power, BEP. Okay, in a Nestle company in 2019 there is 49.4%, and in 2018 the basic earning power ratio is 38.3. Okay, for the FNN company, the BEP is 19.6 in 2019, and in 2018 there is 18.0%. Okay, for the operating margin, ORM, for the Nestle company in 2019 there is 24.4%, and then in 2018 there is 19.8%, while in FNN company in 2019 that is 16.9%, and in 2018 there is 15.5%. Okay, so the return on asset ratio that we have determined in the Nestle company in 2019 is 24.7%, and in 2018 there is 23.1%, and for the FNN company 11.7%, and in 2018 there is 11.6%. Okay, and the return on invested capital ratio in 2019 there is 154.0%, while in 2018 there is 126.7%. So for the FNN company, the return on invested capital ratio is 20.7% in 2019, while in 2018 there is 19.8%. So for the last, the ratio that we have used in the profitability ratio, that is return on equity. So this is the result. In 2019 there is 101.2% in 2019, and 2018 in 100.7%. Okay, for the FNN company there is only 16.2% in 2019 and 16.8% in 2018. So the conclusion that we had is, on margin ratio, Nestle is more strength of a company management because it have high percentage in operating margin that can improve the profitability of a company by managing its operating cost compared to FNN. Okay, furthermore, Nestle also have generate more income from its asset compared to FNN, while in return ratio, Nestle have ability to generate more return to its shareholder compared to FNN. So market value ratio is used to evaluate the share price of a company stock. So in this part we have determined that is earning per share ratio. So the formula is net earning divided by the total share outstanding. So for the result, in a Nestle company in 2019, the earning per share is 2 RM 2.87, and in 2018 there is 2.81 ringgit Malaysia. Okay, for the FNN company in 2019, their earning per share is 60 cents, and while in 2018 their earning per share is around 57.5 cents. So the conclusion is the Nestle company is more worth it for the 2 years compared to FNN company. So that's all from me. Thank you.
Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Iman Hakim. So today I will present about the suggestion to improve financial performance of the company that my group choose, which is FNN and Nestle that listed on Bursa Saham Malaysia. Alright, so from our research, we determined that Nestle is good compared to the FNN. Why Nestle is good on financial performance compared to FNN? This is because maybe they good on marketing department, maybe they good on the financial department. And as we know that Nestle have variety of the group, different product, for example like Nestum, Nescafe, Maggi and Milo. So I straight to the point for the suggestion to improve financial performance of the company. So the first thing is about how to improve liquidity ratio. And my first point is switch from short-term debt to long-term debt. So why we must change from the short-term to the long-term? Because the company have enough time to pay all the liability, for example like loan and mortgage, that more than 1 year. And the second point is about early invoice submission, which is the company can get money more faster, and the accountant can manage about the financial parts of the financial statement. The second thing is about asset management that related to inventory, and the company must achieve the target yearly and monthly, so that make sure that the inventory not surplus or shortage, and make sure that the product or the stock enough in the warehouse. And the second thing is about increased revenue. Revenue obviously shown about the company performance, which is if the revenue increase, then the company performance also increase. So the third suggestion is about debt management, which is a create budget plan. So the big company like Nestle, FNN, and the company that listed in Bursa Saham should have a budget plan which is create for the 5 years or maybe for the 10 years, because with the budget plan they can improve time by time to make sure that all financial department achieve the target, like not receive any losses, or they can increase the profit for time by time, and maybe they can reduce the product that not get the profit of the company. So the second point is the company should work with the restructuring firm, which is they can deal in and negotiate with the creditor, collection agency and investor, so that the company like FNN and Nestle can avoid the bankruptcy and unwanted creditor behavior, so the company can go improve soon. Alright, the next thing is about profitability ratio, which is if the company want to increase the profit of the company, they must find a new customer which is from a different segmentation, like a child, adult, teenagers and senior citizen, and they can remove profitable product and services that not gain any profit and just only increase the losses of the company.
Now I'm going to tell about 5.0, assess the relationship between financial institutions that make up their chosen industry. Okay, now let me tell you about what is meaning by financial institution. Financial institution defined as an intermediary between consumers and the capital to supply the money to the market in financial assets such as stock and bond, loans and mortgages, lease and insurance policies. Okay, now let me see about FNN financial instruments for 2018 and 2019. This industry chose OCBC Bank and Distress Bank for their industry because OCBC Bank indirectly and directly got through the insurance, which is Great Eastern. And FNN also have insurance policies for all their employees where they offer healthcare insurance based on staff category or job. They also got investment in investment properties, investment joint venture, investment associated, and they also make up more than 800 million of capital investment, and also social investment more than 1 million granted by Thailand Tour and Investment, and they also invest 78 million in ASRS. Okay, now we see about Nestle institution for 2018 and 2019. This industry chose Maybank, which has signed a memorandum of understanding with its MOU to implement a unique end-to-end solution will optimize Nestle collection and also credit management policies. They got their investment in investment association, they got their loan, and they got their leases. And thank you very much.
From this, we can conclude that both FNN and Nestle has a equal popularity and successful industry in the market. Based on our analysis, FNN is better than Nestle as the company market ability allows asset to return into cash easily and quickly to pay off its current liability. It's proven by the liquidity ratio comparison, which is stated in the assignment as well. Nestle can be considered as a successful business than FNN has the asset management, profitability, market value for both years 2018 and also 2019. It's better than FNN. Other than that, Nestle have an efficient way to deal with administration and acknowledgement of significant word from things that are gathered or element is labeled for over their entire life cycle. Nestle is more efficient to use their asset management compared to FNN. Nestle is more profitable compared to FNN as their monetary profit is better. Nestle has an advantage that will exchange a serious close set based on our analysis on 2019 and 2018 for Nestle and FNN. Nestle is more worth in earning per share, which is RM2 ringgit 87 cent and RM2 ringgit 81 cent compared to FNN, which is only 60 cent for 2018 and 57.5 cent for FNN. Meanwhile, Nestle connect with social ordinary and in a large number of manners, from helping a single parents to observers, to children, nurturing sporting competitors, to coaching project and bring substance mindfulness thought different exercise. Nestle is movable, dedicated to its guarantee of nurturing Malaysia. The FNN group stayed focused on offering back to society by contributing different zones running from sports to well-being and instruction, sporting branch from various ages and foundation in the local. So we can conclude that both company has equal contribution in the market.